Hi everyone, and welcome to Module 2 of the Complete Technical Analysis Trading course. I'm Steven, and in Module 2, we'll be going over technical indicators before we get into chart patterns and candlesticks in Module 3. Before we get into the meat of the course, just a quick note on technical indicators. We'll be going through a lot of technical indicators and chart patterns through the next several videos. Don't get hung up on trying to implement all of the technical indicators at one time. Pick one indicator to get to know well and see if that fits your style of trading. You can add in a second or even a third indicator slowly as you become more comfortable using the indicators you choose to get to know. It can be frustrating when two indicators give you opposing signals to buy or sell a stock. Also, be aware that some indicators work better in certain markets and with certain stocks than other indicators. It's also possible that one indicator works well with a stock for a period of time, and then the indicator doesn't work as well with a stock, but another indicator will. Just a couple of points as we begin talking about indicators. All right, let's jump into support and resistance. The basic idea with support and resistance is that you'll be buying near support levels and selling near resistance levels. Note, I don't say sell at resistance levels or buy at support levels. Depending on your trading style, you may want to let the stock go through the level to some degree before initiating a position. Often a stock will break through a level by a small amount and then bounce back off of that level. No matter what main indicator you're using or what time frame you're trading in, you should always be aware of major support and resistance levels for your stock or market. And on that same note, as we talked about in a previous video, you should always look at a larger time frame to get an idea of the trend than the time frame that you're currently trading in. Support and resistance levels are so important because they can indicate a major change in a stock that is trending. If you're trading an hourly chart in a stock that you know is bullish and you aren't aware of a major resistance level, it can really throw a wrench into your trading. And finally, a stock that is breaking support or resistance levels, especially on heavy volume, which we'll see in a few charts in just a minute, could be setting up for a major move. As with all technical indicators, support and resistance levels are important as a predictor for what direction a stock will head. But as any technical indicator can be wrong, support and resistance levels are broken all the time. So even if you're trading around support and resistance, you still need to be nimble in your trading. And as always, stick to your trading plan. Now let's get into the charts. Let's look at a daily chart of Bank of America for how to trade resistance. I've drawn a resistance line here at around $25. The stock went up in July of 2017, traded around the $25 level before dropping back, and went up again in August to the $25 level before dropping back, and then traded up again in September to the $25 level. It's a pretty good resistance level at this point. They've been trading at this level for about 3 months. BAC broke above the resistance level on September 20th and 21st. But as you'll see, as the stock moves above the resistance line, the volume is normal for the stock. What we'd like to see is a higher volume trading day when there's a break of resistance. We want to really see conviction of the buyers in the stock and know that people are piling into the stock as it breaks above the resistance line. The same thing when we're looking at a support line. If we're looking for that to break and for the stock to break down, then we're also looking for a high volume day. So here it didn't confirm the breakout with volume, and the stock pulled back a couple of days later. But then on September 27th, the stock breaks above the resistance line with high volume and finishes up about 1.5% above the resistance level. Let's talk for a second about when you want to enter a trade when a stock is breaking resistance. Generally, you'll look for the stock to trade at least a couple of percentage points through the resistance or support level in order to take on a new position. Otherwise, you're going to get whipsawed around the support or resistance level. Again, look at this breakout on the 20th and 21st. If you'd bought there when the stock finished about 1% above the resistance line and you had a stop between 1 and 2% below the resistance line, you may have been stopped out at this point, and then you would have gotten back into the trade here. You can manage your exit and entry points around support or resistance lines by allowing the stock to move a few percentage points either above or below the line before entering the position. Now let's take a look at Bitcoin. We're going to start out on a daily chart. We're trading hourly, so we're looking at a daily chart to get market direction here. We know the cryptocurrency has come down from $20,000 to the $6,000 range. But if we look at the daily chart on a long-term basis, 6,000 was a resistance level back in October of 2017, The stock went up and came down and touched it in November. It came down and bounced off of the 6,000 level in June, and now it's trading back down around the 6,000 level. Now I'm going to zoom in to an hourly chart, and I've already drawn an hourly support level here between 6250 and 6300. I'm going to back out one level. So if we were going to trade the stock long with the idea that it's at a support level, we'd want to make a purchase somewhere in the 6250 to 6300 level when the stock comes back down. Let's talk a second about first what type of profit you would need in the stock and what your stop would look like, and how you can control risk in an instrument that's trading at $6,000. First, if we're buying in the 6250 support area and we know the stock's been trading up to around 6600, so that's the profit we're looking for. So that would be about a 5% gain if we buy at 6250 and sell at 6600. If we're looking for a 5% gain, we want our gain to be at least 2 to 3 times the size of the loss that we're willing to take. And in some trading systems, that's going to be even higher. So a 1% loss here would put us just below the 6200 level. We may want to set our stop at 6190 just so it's not at a whole number, and we'd risk 1%. So what's one way we can manage risk in a $6,300 trading instrument? And that's with sizing. Anytime we put on a trade, we want to make sure that the size of the loss we can take works with our trading plan. So in an instrument like Bitcoin, if we want to limit our risk, then we just limit the size of our trade. And it's the same for any trade you enter into, whether you're trading a penny stock or a $6,000 instrument like Bitcoin. You always want to look at the size of the trade and what a loss on that trade would look like in your account. The first thing you should always ask is how much money I can lose on this trade, and clearly define that. Once you started with that baseline, you can set your profit target, knowing that you're going into the trade with a well-defined profit and loss parameter. Thank you for taking the time to watch this video on support and resistance, and I'll see you in the next video.